Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Before we get started tonight, just remember that we have a live stream at 1:30 New York time. It will go from 1:30 to just after the close. We'll have a number of hours to work together and cover a lot of details. In tonight's video, I'm going to keep this somewhat brief. We're going to cover the S&P, the NASDAQ, and gold, and I'll go through all the other details tomorrow. I'll have plenty of time to work on it. As we look back on yesterday, over the past several days, I've been telling you that we're in this upward ABC type configuration and that we're going to move up toward a target range between 34.15 and the 34.35 level. Well, the markets went right into that level and we saw a reversal, but what generated this was Chairman Powell early in the session yesterday was talking about how the Senate and the House need to get their act together. They need that fiscal stimulus. I've been telling you over the last several months that this whole plan doesn't work without the monetary and the fiscal. Now, they had one round of fiscal and they have not been able to get to the next round. And it's very obvious, and I've said this as well, that there's no way there's going to be a deal before the election. And this is exactly what's going on, but you have to understand the House is just playing games. This is all posturing. I saw a comment on the channel somewhere today that it's politics over people, and that's exactly right. This is just a game with all of us being the guinea pigs, and we know that already. But the realities is that Powell reemphasized the need for that fiscal stimulus. A couple of people that know this, Chairman Powell and the Secretary of Treasury, these are ex-Wall Street guys. They know what they're doing. They understand this concept, but they can't get a deal when you're talking to a bunch of politicians that know nothing about how the financial system actually works. Those are the people that are making the decisions. Unfortunately, that's also the roadblock in the system. This will all be magically done right after the election. So we're a month out from probably some stimulus. It looks like to me overnight the markets are finding a little bit of a bid after following through early in the session on the futures. We're now positive, but most likely what we're going to see is more grinding as we go forward. There's a pattern I'm going to discuss tonight, which is an outside reversal that occurred on the S&P. We're putting a card on this video and in the description a link to a video that I did a couple months ago about shorting Apple. In that Apple video, what it was really about is the 3-day outside reversal pattern. We had that happen today, so watch that video. All the rules are there to understand this in more detail, and I'll go through that all in the technical section here in a few minutes. Today will be most likely just a waffling around day. We don't really have any material news coming out. We've got consumer credit coming out, expected to come out around 15.2 billion. That's up from last month. But the realities are that market participants are going to start to look to those claims numbers on Thursday and the continuing claims. And that's really all we have this week, as I mentioned in the last couple of videos. Let's go ahead and take a look at the WaveTech database and a quick overview of the technicals that are setting up for Wednesday's open. As we review the WaveTech database, we're continuing to get a substantial amount of traction in spite of the down day yesterday. We saw 500 new buys and about 100 sells on the short-term models. We're now up to 27.65% bullish, so we're continuing to climb. Over the next couple of days, if we stay sideways to positive, we're going to see this move up into probably 35% and maybe move toward the 42% level. We'll see if that happens. This does tell us that something bigger is going on. And as you'll see when I cover the S&P here in a minute, we're seeing the support levels continue to hold in spite of what appears very emotional downside. The database continues to tell us that there is something bigger going on, that this consolidation phase and sideways trading range, ABCX, ABC pattern that I've talked about in the past, is definitely what's going on, and it's going to take a while for it to unfold. This consolidation phase will most likely continue well beyond the election. This overall configuration is definitely telling a story that we're starting to see some real stability. We'll continue to watch this database. 42% bullish is the next key number that I'll be watching. We get above that level, that's going to tell us that there's even more of a consolidation and start to suggest that a short-term rally is likely. As we review the S&P 500 futures, you'll see that we're up about 14 handles overnight. We did trade as low as 33.32. The high is now 33.69, which we're about 2 handles off of that. But as we look at the market grid here, S1 was 33.35, so we printed an S1, and we printed an R1, which is 33.70 with a high of 33.69.50. So we've already done S1, R1. I'm not sure that we're going to be able to trade much above R1 here. We do have a number of other things that are in this pattern. You've got the 40-day moving average at 33.75, and then the next level from a market grid viewpoint is 33.90 to 34.09. And the pattern doesn't suggest that we're going to be able to get back to 34.09. Now, yesterday's high on the reversal pattern was 34.21. This is the futures. And on the grid today, we have an RXT of 34.26. This is basically suggesting the highest possibility today would be a retest of the highs of the reversal. I want to review that pattern that I talked about last night. This is the ABC pattern, and the projection here was for a move in a ratio of 0.5 or 50% of the length of the A wave, which is 184 handles, and then a 0.618. The exact target was 34.15 to 34.38. The high was 34.31, and I mentioned in last night's video to watch for a reversal very closely from here, because this was going to be a very contracted pattern that was going to unfold. And now what we're likely to see is a potential for a ABC pattern like I'm drawing in, but we will see some sort of structure and a continuation of the sideways range. As I just mentioned when I was covering the database is suggesting that we're going to see some sort of consolidation here, that there's enough traction starting to come into the market that it can stabilize here. It does not appear that there's going to be a big collapse and there's a big leg down like this. This is a no. I'll X that out. That's not going to happen. The pattern that has the highest probability will be this ABC down, which will complete a large ABC down. So let me just draw that in so we make sure we have that in context. So we had the A, B, C down, and this was an A wave, and now we have an A, B, C up. This would be the B wave, and then we would get an A, B, C down. I've discussed this as well, that we're likely to stay within the confines of this larger Fibonacci grid that I have up here, which suggests that 32.97 could be the low. Let's discuss this bar. So let's go back to day before yesterday. We got the RXT sell signal. I told you this signal that we are likely to close lower, and typically when we get the RXT sell signal, which is a close above that yellow line, that will signal a 2 to 3 day sideways to down pattern, and typically it will go right to the bottom of the market grid on the next day, and it did that. What the 3-day trade says is this, and I want you to watch that Apple video, but what it says, after reversal bar, the next session, 2 things have to happen. And we'll just cover today, and I'll let you watch that video to get the other rules. 2 things have to happen. Is 1, we need to make a new low from yesterday. So that number is 33.54 on the cash. We need to take that low out, and we need the close lower to confirm the outside reversal. If it closes higher or it doesn't make a new low, this bet is off, and we'll see just a couple of days of sideways pattern set up, which will take us into Friday's close. So we'll see how this all plays out. To confirm the downside, we're going to need to close lower today and make a new low on the pattern. Now that's going to be pretty close. We closed only 6 handles off the lows yesterday. So this should be an easy criteria if we're going to see lower prices. As we look at the market grid here, you can see the S1 33.47. That will be a new low. That's below yesterday's low. Yesterday's low was 33.54. So the grid suggests a S1 hit will be enough. We'll just have to close. We can close by $1 lower. It just has to close lower. It's a criteria I've used for a lot of years, actually probably going back to about 1984, 86. This is a trade I always do. A higher opening tomorrow is golden. You sell the higher opening. If it continues to stay like this, right now the futures are trading up 14 handles. This is perfect. You sell the higher opening. If it doesn't make a new low and close lower tomorrow, you take the trade off, usually have a small loss or a small gain, and it goes on, and that's the end of the trade. But like I said, watch that Apple video. That will walk you through all 4 steps in that. It's a trade you can use on a stock, anything you want. It's a golden nugget that you're going to get from me, so make sure you watch that video. Next market I'll cover is NASDAQ. NASDAQ also experienced the outside trade. There are some key numbers to watch on the NASDAQ. 11,217. The low today has been 11,208. We look at the grid here. S1's 11,198. So we didn't quite get to that number, but it's basically an S1 hit. R1, 11,349. We've got fairly close, a high of 11,331. But also, we're sandwiched between 2 moving averages, the 21 and the 40. 11,217 is the 21, the 40 is 11,409. If we look at the grid, R2 is 11,433. Same criteria that I mentioned in the S&P on the outside. We close lower, make a new low, close lower, that'll be negative. One thing I want you to see here is that the PPMs are all turning up. All 3 of them have turned up. That is a cautionary signal. May not get the confirmation for the outside reversal bar suggesting that there's 2 to 3 more days down. The probabilities for this outside reversal working today is about 40%. It may be one of these very short-term small profit, small loss kind of thing. And the one other criteria that I didn't mention is you can't take out yesterday's high, which doesn't appear to be very likely in any of these markets. The next market I'll cover is gold. This is the daily chart. Yesterday's action saw R1 get hit at 1927. That was the high of the session. The extreme was 1890 on the downside. It exceeded that, but we reversed right off of this number. It was also right at that 21 period moving average that I discussed yesterday that had a fairly decent slope. There's another number on the weekly charts that was significant. That was why we got that reversal, but we did see the dollar uptick a little bit, actually triggered the sell-off in gold, and it seems to be, and I've talked about this before, it seems like gold is risk on, risk off. It goes with the stock market lately. It's been somewhat positive when the stocks are going up and negative when they're going down. So it's an interesting configuration. It's been trading like this for a number of weeks. Also see that PPM1 is turning up. It's not really that significant, but the key numbers here are going to be 1894, which is the 10 period moving average. We're likely to move back above that level. We're trading at it right now. We're looking at the market grid. It is likely that we'll see a move back toward 1917. The low STX 1871. We printed in between S3 and STX as the low overnight 1877, and the high's been 1894. I would look for a 1917 possibility today as the volatility looks like it's trying to kick up a little bit. Most likely, and I mentioned this last night as well, I thought we'd stay between the 10 and the 21, possibly the 40 period moving average. The 21 was exactly the high. That number is still going to be significant. It's now at 1920. So expect this sideways pattern to continue as we're seeing the PPMs turn up. This will complete the video for tonight. Thanks so much for watching. We'll see you on the live stream tomorrow at 1:30 Eastern Time.